Okay, thanks for reminding me. Alrighty, let's do this. Sorry guys, I got to get this in order. Okay. All right, is that working now? Sorry about that. I have a live stream that goes to Twitch, YouTube, and I think LinkedIn. Okay. That being said, let's keep on progressing forward. We got a couple of stocks to take a look at this morning, but before I do, Namaste, Shaka. Shaka Singh. Okay, here we go. Odom, good evening. Uh-oh, too many. There it is right there. And here we go. Ishmael Moore. Thank you to teach us. I'm learning a lot from you. I'm already making money. Awesome. Cool beans. Who is the cowboy at the bottom below the screen? Roy Rogers. How the hell did you see that? That's way the hell down there. That's Roy Rogers. Some of you probably don't know who that is. All right, Felix. Arcal, good evening. Appreciate you. Joey, how are you today? Funny. Do I have a book? I got 14 of them. Which I shouldn't say that because book number 14, haven't uploaded it yet. All right, Mama, good evening. And Christ Moneymaker, good evening again. All right, so what are we trading? Anthony, we're getting to that right now. Sazo, how are you doing today? So let's go down to the list. We've got to finish up the list from yesterday, and this is the list from today. So let's go. Antoine! Oh, Intel and VFC. Intel and VFC. Outstanding. All right, so let's do this. First on our list tonight is going to be Dow. Holy cow. Let's look at the Dow. Not the Dow, just Dow Chemical. Don't want people to get confused. Oh, why not do Riot? It's right here. It's up. It's right on the screen. Let's take a look. Okay, so we'll do Riot first. It's right there. May as well. I actually own some, so it is what it is. Here's the high, 16. Here's the low, right around 6. It was at 10 about a year ago. Now it's at 893. Okay, it's not at the high. It's not at the low. Henderson. Is there no way of flipping the screen so that the writing is the right way around? Henderson, as soon as you find out, you let me know, and I'll do that. Okay? As of this moment, I don't know how YouTube does it. Okay? I turn the computer on. Turn the screen on. Now, TikTok allows me to reverse the screen. YouTube doesn't. Sorry. All right. Here we go. $8.93 a share for Riot. If you know who they are and you know what they do. Sorry, I got that on the screen. That's still on the damn screen. All right. Just had to move the screen a little bit. Yeah, much better. No glare. All right. Here we go. Got to catch my bearings. Now, $8.93. The 9 is going for 24 cents a share. Now, 24, I know, for you guys that are new here, 24 cents a share doesn't sound like a lot. But when you're doing 100 shares, 500 shares, 1,000 shares, 10,000 shares, that number adds up quickly. And that's not the number we're looking for. We're looking at that number, 24, in direct relationship to the purchase price. So if the purchase price is $8.95 and we sell the strike price at 9, which is right here, okay, the relationship between that and that, okay, 24 cents on a $9 stock is well over 2%. Now, if we can get 2% every single week, because as you can see the dates, 23 May, that's this Friday. 30 May, that's next Friday. 6th of June, that's 3 Fridays away. The 13th of June, 4 Fridays away. 5 Fridays away. 6 Fridays away. 7, 8, 9. Every single week, I can do this specific trade. It's called a covered call. And I only do covered calls on dividend stocks, on companies that are consistently profitable. Okay, I have only 2 criteria for the stocks that I pick. Only 2. Number 1 is consistency of profitability. How often have they been profitable? Well, I like 2 decades. That's 20 years. So at the end of the year, imagine this, the end of the year, 5th whole year in one number. And that's the dividend. Earnings per share. What is the profit the company made? It's only one number. So is it higher than it was last year? Or is it lower? That's it. So companies that have 2 decades of consistent profits. And then I do the covered call, because the covered call is one of the safest trading strategies there is. It is so safe they allow you to do it in a retirement account. Urban. Yo, my grandparents came over lately. Sorry, I couldn't watch your streams. All right. Alrighty. Good evening, good evening, good evening. Okay. Greed. Talk Bitcoin to me. I don't do Bitcoin yet. Until Bitcoin is consistently profitable without all the, what do you call that? Bumps? I don't know. All right, David. No dividend on Riot. Yes, I'm aware of that, but it's already up on the screen. I was just going through the motions. And every once in a while, I do have clients that say, hey, buy this for me. So I do. All right? So you're right. Riot does not have any dividends. But here's the thing. Do you remember I said if it's on Warren Buffett's list? So if it's on Warren Buffett's list, I'll buy it. Now, Apple Computer does not have 20 years of dividends. Yet I still buy it because it's on Warren Buffett's list. What does covering your calls do for you in real dollar terms? Man! All right, you ready? Real dollar terms, covered calls. You ready? I earn 1% or more every single week on every investment that I have. Okay, so on $100,000, that's $1,000 a week. Okay, so when I say, hey, this is James from the 10-Minute Trader, okay, that's 10 minutes. Sit in front of my computer for 10 to 15 minutes in the morning every day. That's about an hour a week. An hour a week to make 1%. Now, I get 7 accounts. I share 3 of them publicly. Okay, so you can actually see exactly how much in dollar terms a covered call at 1% makes. Now, don't think you're going to do the exact same thing that I'm doing. Okay, because I've been doing this for a very long time. I'm retired. I would like to think that when anybody comes into retirement, they have at least 6 digits in their account. 5 minimal. 5 digits at least in your retirement account when you want to retire. 6 would be great. More than 6 is even better. But you have to have something, and you have to start somewhere. We're the only species on the planet that's got to pay to live here. Okay, so when you retire, you got 2 choices and only 2 choices. And don't let anyone kid you otherwise, because they're lying to you. I don't know who you are. I have no, why would I lie to you? There's no upside for me. And I'm getting old. I just can't remember the lies, so I just don't do it. Okay, so the 2 choices you have when it comes to retirement. Learn to do it yourself, or give it to someone else to do and just accept whatever they give you. Okay, why do you think CDs, a certificate of deposit, gives you a whopping 1 to 2%? Why? Oh, Kagdala, Bajalsa? I don't know if that's correct in that language. Okay, what stock does he have on the screen now? Crossfire, that is Riot, R-I-O-T. So hopefully that makes sense. So whenever you get to retirement, okay, however much money you have, you either give it to someone else and they'll take care of it for you, okay, or do it yourself. Now what I'm doing is I'm showing you the exact same strategy I taught for my 9-year-old. Simple, safe, predictable, consistent, 1% per week. 1% per week is over 50% per year. If you compound it, you should hypothetically double your money in 14 to 15 months. Hypothetically. Okay? Doubling your money every 14 to 15 months on companies that have 2 decades of consistent profitability. Now we do check every week. This week we checked and there was 10,043, I think there was. 10,043 companies you can invest your money in. What are you investing for in the first place? To buy a house? To send your kids to college? For a nice retirement? For a boat? For a wedding? For a vacation? You all have your own reasons, whatever it is. I'm just telling you what I'm doing. If you're interested in it, fine. Hang out. I'll teach you what I know. But realize I'm doing this for my children and my grandchildren. You just happen to be here, so if you have a question, I'll answer it. Okay? And I'll give you from my perspective. Now, my perspective is pretty specific. 1% simply, safely, predictably every week. I don't have the luxury of being wrong. So I don't do capital appreciation. I don't buy stocks and wait for them to go up. I have a plan. I want to know what I'm going to make before I even do it. All right, so enough with the chatter. Let's get to some actual stocks, all right? Let's look at some stocks, baby. Here we go. Riot, first one. High, low, what's this? Look at the motion. Down, up, cool. Looks great. But do you like the company? That's going to be next on the list. How much should we sell the shares for regarding covered calls? Mindy, sit tight, okay? All your answers will come to you. Okay, so we're going to go through a couple of samples, and you'll see how it works in a couple of samples, all right? And also, if you didn't know, Mindy, the screen here is being recorded on YouTube. So tonight's session will be live as soon as we're done. Okay, so as soon as we're done, the video will be live for you to watch. Excuse me. Alrighty. I don't understand anything. Sure you do. You understand plenty. And the only reason I know you understand plenty because you got that sentence correct. You're also on some kind of electronic device watching me talk. So you do know something. You don't know where to start. You need to start with the acceptance of believing that you can do it. It's perception. Either you think you can or you think you can't. Either way, you're going to be right. If you think you can't do it, you're absolutely right. If you think you can do it, you're absolutely right. It's your life, your decision. Take control, do it. Take it one step at a time. Okay. What are you trading? Dividend stocks. Right now we're taking a look at Riot. Never sell at a loss, but can you be forced to sell at a loss? Chris, Christ of money, yes you can, if you don't plan properly. Similar to, I have stipulations to my trust for my children, my kids. Hey, you know what? I worked since 1973, okay? I got off the school bus in elementary school. That's my first job, in elementary school, okay? I would get off the bus. I wouldn't even go home. I get off the bus and I jump into Old Man Simmons' pickup truck and we go off into the field and chop wood, do a whole bunch of that farming crap. Yeah. Anyway, Riot. Now, we figured out that $8.93, the closest strike price is going to be 9, which is going to be 24, which is going to be well over 2%. It's going to be close to 3, but it's going to be over 2%. Great. Well, let's keep on working. Now, I want to take a look at the chart. Oh my God, my voice. I'm not used to talking so much. All right. A year ago, Riot's at 1050, 1060, some of that area. She drops, shoots back up. Here's the high of the year, 1582. That was back in November. Okay, from there, she drops to find the bottom of the year, 616 in the middle of April. That's the bottom of the year right there. And then she's going up. It's clear to see. Now, you can't tell me you can't see that. Okay, here's the top. Here's the bottom. Now it's going up. You're going to make most of your money buying low and selling high. You can't get any lower than the low of the year. But that was a couple of weeks ago. What's happening now? Well, let's zoom in a little closer because we know the numbers look good. So let's check out the chart. So the last 90 days. Last 90. What's going on here? Looks like we missed it. Let me explain. Okay? In a 30-day period, that's 1 month, 30-day period, you can only have one 30-day high. There it is right there. You can only have one 30-day bottom right there. Now, usually, it's not guaranteed. There's only 3 guarantees in life. Few of you know all 3 of them. Most of you know 2 of them. But there's no guarantee it's going to continue doing anything. It's going to do one of 2 things. It's going to go up, it's going to go down. That's it. That's it. That's all. It goes up, it goes down. That's it. Doesn't do anything else. It doesn't pop off the screen and help me wash the dishes. No, it doesn't do that. It goes up, it goes down. Okay, so here's the 30-day bottom. Shoots up a 30-day high. Well, what do you think is going to happen at the 30-day high? Well, people like me and you, some of you at least, are going to start taking, hey, wait a second. This thing just went from 6 to 9. Now, from 6 to 9 is a $3 move. A $3 move on a $6 stock. Oh, come on, that's a 50% move. This was probably more like 45, but still 40, 45% in 1 month. So, of course, people are going to take profits. When people take profits, stocks come down. That's all they do. So if we like a company, now I like this one, I have some. Okay, it gives me a nice return every single week, fine. Okay, it goes up. Well, now it's going to come back down again. Not the time to jump in. For me. Okay, you guys got to figure out what you're doing. So let's go to the next one. The next one is going to be Dow, D-O-W. All right, Dow, D-O-W. And here we go. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Down, sideways, down, up. It's at 29.79. Okay, the closest strike price to 29.79 is going to be 30, right? So to answer your question, how do you figure out which strike price to sell? Well, it depends on what the stock price is. Stock price is 29.79. Okay, the bid and the ask, okay, the bid's 29.75, the ask is 29.85. Okay, it closed at 29.79. So yeah, that's about the right price. So the closest strike price, which means the price I'm going to sell it for. Now this is what I'm buying it for. And what I'm going to sell it for, it's either going to be the 28s, 28.50, 29, 29.50, 30, 31. 30, 50, 31, 31, 50, so on and so forth. So pick a strike price. And then I got to pick a date. Well, I do this every week, so I want it to expire this week. So if I buy it tomorrow morning, I'm going to sell the 23s, which is this Friday. I only got 3 days left. So what kind of premium can I collect? Well, on the $30 call strike, I'm collecting 37 cents. 37 cents is more than 1% on a $29 stock. So imagine that, if you will. I buy the stock for $29.79. I sell it to somebody else with a contract called a covered call contract, also known as buy right, or buying the stock and selling a call option for somebody to buy the stock from me at a predetermined price, the strike price, at a predetermined date, the expiration date. So me, if I'm buying it at $29.79, I'm going to do the 30s, and I'm going to do it for this Friday. And I'm going to collect that number right there, which is over 1%. So what's the worst thing that could happen? Okay, if Dow goes up, I get all my money back, and I get to keep that little premium. Okay? If the stock goes down, I get to keep the stock on a company that's over 20 years old, has consistently been profitable, and they increase their dividends every single year. And I've already collected one premium, and then Monday, I can do it again with next week. And then I can do it again, and then I can do it again. And if I'm getting 1% every single week on a company like Dow Chemical, we all heard of Dow. If I get 1% every single week, why would I ever sell it? Now, I do have to admit, the stock goes up, then it goes down, then it goes up, then it goes down, then it goes up, then it goes down. Great. Where is it at this moment? So wherever it is at this moment, $29.79, I'm going to zoom in, take a look at the last 30 days, and try to make a guess on where do I think it's going to go next. Because that's all we have. We have today and the promise of tomorrow. It's not, not the promise of tomorrow. The illusion of tomorrow. Okay, we don't have yesterday, we don't have tomorrow. We have now. Okay, so what am I doing now? Where's this thing going next? Well, look at the pattern. Okay, bottom, up, down, up, down. Well, where's it going now? Now, hypothetically, it looks as if it's going up. Okay, is that guaranteed? No, there's only 3 guarantees in life. But here's the thing. Do I like Dow Chemical? Am I willing to buy it and own it and sell a covered call every single week, collect 1% every single week until it hits my target price? Well, what's my target price? My target price, if I buy it at $29.79, my target price is $30. Now I have to ask myself, am I okay with buying Dow Chemical at $30 and holding on to it? Because what's never, ever, ever going to change is what I agreed to buy it for. So if I buy it for $29.79, 30 years from now, my children say, hey, we got Dow Chemical back, who knows when, at $29.79. But I'm going to write a covered call every single week until it hits my target. All right, next. So let's do this one, just for the fun of it, okay? Because it looks good. Up, down, up, down. Well, usually it's going to turn and go back up again. Okay, so let's see. What does a $30 call strike covered call look like on Dow Chemical? So let's do it. First thing I want to do is change this. The strategy. Covered stock. Covered because I want it to be safe. It's one of the safest trading strategies that is. A covered call. You can ask anybody. Don't take my word for it. Ask someone. Is a covered call a safe strategy? Okay, so we're going to go covered call. There we go. And we're going to do the 30 right there. And we're just going to do one contract. That way you can, for those of you who paid attention in algebra class, can understand if I'm doing one and it's making this much, I have this much money, maybe I can do 4. Maybe I can do 400. Maybe I can do 700. I don't know. I don't know what your situation is. Okay, so here's the order. I always tell everybody, read it out loud, because beginners are going to lose most of their money by hitting the wrong button. It sounds funny. It does. I hit the wrong button this morning. A couple of weeks ago, during a live trading session, I hit a wrong button and lost $2,500 because I hit the wrong button. Okay? I'm sorry to sound so cavalier about that, but there's nothing I can do once you hit that wrong button. It's it is what it is. So I always tell anybody, if you make a mistake and you hit the wrong button, you immediately drop the phone, pick up the phone, call your broker. If you can get your broker, if you can get to your broker in a time frame in which they will say, not a problem, we'll take care of it. That's within 30 seconds or 40 seconds or a minute or 2 or 3. Because anytime you call your broker, it's time-stamped. When I say, we have you on record, the call is being recorded, whatever. We don't record the call for whatever, for what we call training purposes, whatever BS they tell you. It is time-stamped. So they know if you put an order in X time and 2 seconds later you picked up the phone and said, oops, more than likely they will change it for you. But if you wait 5-10 minutes, ain't going to happen. You make a mistake, pick up your phone. All right? If you don't, you're out of luck. All right. No take-backs. Hey, One Steak, how are you today? Hey, Luigi wants to take a look at... Oh, wait a second, let's finish this one. Luigi wants to take a look at U.S. Steel. Now, I did buy some U.S. Steel this morning. I bought some yesterday, and I bought some more today. All right, anyway. So, here we go. Here's the order. Buy one covered call of Dow, D-O-W, 100. That is the weeklies. 23 May 25. That means this trade, or this option trade, is going to expire this coming Friday afternoon at the closing bell. The $30 call option, remember we talked about that, against the stock at the market to open to open. Oh my God, my voice is cracking. It's going. So here's my maximum profit, $60.50. Okay, so what we're going to do now is we're going to calculate what my rate of return is going to be. What am I trading? Finance with April. How are you today? Dow, D-O-W. It's a covered call on D-O-W. All right, so here's my maximum profit. I'm going to whip up my calculator so you can see exactly the kind of rate of return. This is calculator. Alrighty, so clear. Now the maximum profit, $60.50. Okay, maximum profit right there, $60.50. Okay, cost of the trade, including commissions and fees, $2,900. So we're around $3,000. Okay, now it's not. You're not spending the money. You gotta get that out of your head. You're investing it. You're buying into Dow Chemical, so you own part of the company now. You have what is considered as a viable asset, cash producing asset. So 100 shares is what you need to do one contract. So you buy 100 shares of Dow Chemical, it costs you $3,000, and you get $60 a week from that. That'd be awesome. Well, let's see what the math comes out to be. Hold on. Do Wolf. A1 steak. Really? You want me to do Wolf? I'll write it down. We'll take a look at it. But it's at the bottom of the list. And the list is kind of lengthy. Dunder Mifflin. No idea what that means. Do you... Wait a minute. You do too much thinking of nothing, and you're losing your right eye. Okay, Adam, I hate to be the bearer of bad news. I got a nail stuck in that sucker when I was 17, back in the 1980s. Okay, I'm well aware of that. Anyway, so maximum profit, $60. We divide it by what we invest, which is $2,900. Ooh, look at this, I got a heart. So here we go, find out. $60.50 the profit. What is the investment? $2,940. Well, that comes to a grand total of 2%. Okay, if 1% is 50% a year, 1% a week, 50% a year, 2% a week, that's over 100% a year. I don't know about you, but if I'm going to buy Dow Chemical and it gives me 2% every single week, oh, hell yeah, I'll do it. If it makes sense. Do you like the company? These are very important questions. Remember rule 1? Never buy something you don't understand. Elliot, I'm just joking. It's not real. It's from a TV show, The Office. Oh, okay. Wolf is filing for bankruptcy. Well, Jeff, thank you for that very much. Okay, you hear that, A1 steak? Jeff says it's going into bankruptcy, so we're not going to do Wolf. All right. So I'm going to write that one down. Dow at 2%. Okay. Next on the list. Next on the list is my man Hank. Come on, Hank, sing that song. Check it out. All right, hey, here we go. Don't. Oh, my grandmother can't come on stream coming. Okay, got it. You can short it. Yeah, I have no desire to do shorts. I don't. Okay, next one on the list. Dollar General. Ooh, who likes Dollar General? All right, I'm going to say no right off the bat. Okay, so it should take you 3 to 4 seconds to look at a chart. Okay, I look at 4 charts. The 1 year, a 90-day, 30-day, and then a seasonality chart. Well, this right here, I can tell you no. Reason being, here's the high, here's the low. Here's where we were, here's where we are, and look at the motion, down, up. Well, look at where it is right now. It's the high of a 30-day period. If I zoom into that right there, okay, I don't buy at the high of the 30-day period. I'll buy here when it drops, finds the bottom, and turns around. Now, when I say turn around, I'm looking at 2, 3, 4 days. Okay, bottom, 1 day, 2 day, third day. That's when I'm in. Third day. Okay, after the bottom has been isolated. You can notice the bottom every time you look at a chart. Well, they're pretty visible. All right, nothing for DG. Sorry. RL. What is RL? Somebody asked me about RL yesterday. Oh, Ralph Lauren. No. Wasn't that quick? No. Look at the chart. It's at the high. It's a monthly. No. No and no. No to Ralph Lauren. Sorry. Sorry, Ralph. CVS. Interesting. Ooh, I like that. 3 to 4 seconds. Did you notice that? High, low, was, is. Look at the motion. Sideways, up, down, up, down. Look what's going on right here. This is today. That looks exciting. I want to zoom into that, but before I do, is it worth our time? Now, we're going to have a little bit of an issue considering tomorrow's Wednesday. Because selling covered calls, we need 5 days for 1 week. Monday through Friday. Well, Friday we have 5 days of time value. Wednesday, we have 3 days. So we just lost 40% of the time value on the covered call for this week. But we could push it into next week and give us a little bit more money. Rocket Lab hasn't been around for 20 years yet. Okay, they don't have 20 years. MVST. 13 Chase, what's happening? MVST, never heard of it. MVST. VKTX. I can tell you no to that one right away. VKTX. 13 Chase. You may like this. Now, Chase, don't feel bad if I say I don't like it. MVST. MVST. Hell no. What on earth would make you think I would like that? Seriously. Number one, 2 decades of increased dividends. I don't think that has it. Okay? Number 2, it is a monthly optionable stock. No matter what you do with a monthly optionable stock, the only way to get weekly cash flow on a monthly optional stock is to sit in front of the computer and look at this stuff all day. No. Okay? I appreciate what you do, Chase. I do. But I'm looking for simple, safe, predictable, consistent. Okay? This thing was below $1 a couple months ago. Now it's above 377. It's great for those who want to speculate and looking for capital appreciation. I'm looking for cash flow, brother. That's it. I don't do capital appreciation at all. I honestly don't care about it. I want consistency of profitability and safety for my nest egg. Samir. SPY. Oh my goodness. I'll write SPY down and I'll show you why I don't like it. SPY. It's not consistently profitable and the numbers are actually horrible. Carl, Chevron, CVX. CVX, cool beans. Brian, Whirlpool is a monthly, I believe. All right, I saw someone with JP Morgan, WHR, and Vanguard. No to Vanguard. He said, hell no. All righty. Let's keep on working. All right, nice try, though, Chase. That would be good for someone who wants to speculate, somebody younger than me. All right, remember, I'm retired. No desire to be wrong. If I'm wrong, I lose money. If I'm wrong, I have to go back to work. Yeah, no thank you. Samir, Verizon. I'll write down VZ. All right. Next on the list. Aren't we going to do CVS? Yeah, I said CVS looked pretty good. All right, so let's take a look at CVS. Okay, the high, the low, where was it? Where is it? Look at the motion. Sideways, up, down, up, down. What's going on here? 63.74 is the current price at 63.74. The closest strike price will be 64, right there. It's going for 63 to 71. You're going to get you 1%. Just going to squeak on in there with 1%. All right, so let's take a look. A year ago, CVS is at 58. Hit the bottom of the year, was at the end of the year. Look at that, like 4 or 5 times it hit 43. Right down there. And then it jumps up the high of the year just recently. So look at the last 90 days. The last 90 days would be right there. Okay? High, low is, look at the motion. Up, down, up, down, up. It's bouncing off the bottom right here. Okay? Top's here, bottom's here. Now she's going up. Okay, here's our 30 days. The last 30 days, look, she's at 66, jumps up to 72, drops down to 58. That's a big drop. Well, now she's going up. 1, 2, 3, 3 days up. What couldn't you ask better than that? Buy at the low, right there, 3 days up. Now, that's not a tip. That's not a suggestion. That's an observation. Somebody wants to take a look at Target. Target's already on the list. Okay. Why no to Vanguard, if you don't mind me asking? Ashes, have you actually taken a look at the returns that Vanguard has given you? Seriously. Take a look at, find yourself a good financial website. Whatever you use. I use Yahoo Finance. Okay? I love Yahoo Finance. I've been using it for decades. Literally. So I can take a look at how consistently is that company profitable and what kind of rate of return are they giving their shareholders. Thoughts on Jalen Brunson? Jack, you got to give me a ticker symbol. I have no idea who Jalen Brunson is. Carlos, Procter & Gamble is a good one. Gaming, okay. What are you trading today? Well, I did some U.S. Steel today. As a matter of fact, let's do a covered call on CVS, and then we'll take a look at U.S. Steel. All right? And I'll show you what I personally did on U.S. Steel today. All right, CVS, last 30 days, look at it, up, down, now it's going back up again. Honestly, you can't deny that. That's the bottom, and it's going up. Okay, here's the top, comes down, now it goes up. That's all they do. They go up, they go down, they go up, they go down. And what do they do next? They go up, they go down, they go up, they go down. That's it. That's it, that's all. Up, down, whatever. Anyway, so let's take a look. $64 for CVS. Okay, going to change this to covered stock right there. The 64 is right here. One contract. Okay, so you're probably thinking to yourself, I probably should have paid attention in Mrs. Smith's algebra class. I remember Mrs. Smith. Blonde hair, lady of the 70s. Nice. Nice lady. All right, anyway. Maximum profit, 117. Investment, 6,200. Buy one covered call, CVS 100. That's the weeklies, which means this trade is going to, half of the trade is going to expire this Friday. Okay, remember it's 2 parts to the trade. Let me explain. Buy one covered call, CVS 100. That's the weekly. 23 May 25. That's this coming Friday. The 64 call option against the CVS stock at the market to open. Now the reason it says to open because we're doing 2 trades. 2 trades in one. 2 for 1. Johnny, tell her what she's won. Well, if you order now, 2 for 1. Okay? I'm buying the stock. That's one order. Then I'm selling the option. That's the second order. Now the catch to it is the stock that I buy, well, that's mine until I sell it. The option the option that I sell against the stock I just bought expires this coming Friday. Live will end in 5 minutes. If I don't verify, I'm human. There we go. Okay. So what was I saying? Oh, yeah, 2 trades. Okay. Buying the stock, selling the option. The option is going to expire this Friday, and then we will see if we should trade it again. Okay? It's always a numbers game. Okay? I want to preserve my capital. If I put my money on this horse this week, well, when this horse comes in, I'm going to take that money and put it on another horse next week. Okay, and then I'm just moving it from one to the next as they're coming into the trading session. Okay. Rosario, strike for XVS. I have no idea what XVS is. PFE, Pfizer. Pfizer's already on the list. What's the best way to do that? It's me, Dan. Dan, to do what? Dan, you got to remember, I got 7 channels going, which means I have 7 different conversations at one moment. You want the strike price for CVS? Won't it likely get assigned before Friday? The interesting thing about assignment, whoever buys the option, they can do whatever they want to do. But go through the motions a second. Brad, how do you handle a scenario when the stock is well below your cost basis? Okay, Brad, I'm going to catch you on that one. Okay, don't go anywhere. I'm going to answer that question specifically for you. So as I was saying, follow along from me for a second. Okay, if I buy the stock at the current price, $63.50. Okay, you with me? $63.50. I sell somebody the right to buy it from me at $64. That's higher than I paid for it. The only way it can get assigned is if the stock is above 64, which means in this scenario, I buy it at $63.50. I sell somebody the rights to buy it from me at 64. That's this order here. Okay? Then I will collect the difference between the purchase price and the strike price, which is 50 cents per share. Okay? That's the difference. I get that profit, 50 cents. But I also collect $117 for each contract I have. So I'm getting the contract price or the insurance policy from the option, okay, covered call, okay, and then I'm also collecting the difference between the $63.50 and the 64. Okay, profit is profit no matter which way you take it. So yeah, there is the chance of it will be assigned, but the only way it's going to be assigned is if it goes over 64. It goes over 64, you walk away with a profit. Now, I'm not quite seeing the down part about that. Okay, what won't it likely get called away? Yeah, assigned. I really don't care if it gets assigned. Did I make a profit? Okay, that's the question you should be asking. So there's 2 things are going to happen on Friday. It's either going to be above 64, I'll get all my money back and I get to keep the profit, or it's below 64. I keep the profit and I keep the stock, and then I sell it again on Monday. And the exact same thing happens again and again and again. Monday, I sell the options. Friday, they either get assigned, or I roll them into the next week and I do it all over again. Okay? So I'm going to, right now, find out what percentage is 117 from the 6,200. And then, if it gets assigned, well, we get to keep that and we get all our money back. I'm not seeing the downside. All right, clear that. So 117 is the maximum profit. See it right here? 117 max profit divided by 62.83. Okay? Divided by 62.83, and that comes to 1.8%. So, who asked the question? Okay, AWCO Awako. Awako, interesting name. I'm just reading it the way it sounds. Simone's in the house. Okay, so if I'm making a almost 2% profit for 1 week, actually 3 days, and getting the difference between the purchase price and the strike price, I'm walking away with a profit. I don't see the problem. Miss your taps. When do you roll over to next week on Friday before close, right? Well, miss you, it's always going to be depending upon the numbers. Okay, like I said, I have a live trading group every morning. We sign in. We take a look at all our positions. Then we decide, do we roll it this week? Do we roll it next week? What do I do today? But some things don't change. What I bought it for never changes. Okay? The strike price I sold never changes. The premium I collected never changes. The only thing that changes is the stock price at the moment. It goes up, it goes down. So as it goes up, am I more at risk? Am I less at risk? What's going to happen? Can't answer those questions until it happens. So I can't answer the questions for Friday afternoon with what I have today. So we play it by ear. Monday, Tuesday, Wednesday, Thursday, 9 a.m. We take a look at all our positions. And Friday afternoon, before the market closes, we take a look at our positions to make sure we don't lose anything. But this is basically what we do. Buy a good company, 3% every single week. That's over 50% a year. I'm not seeing the issue. Chris, but I got some. Chris, I also said, send me your phone number and I personally will call you. I will not give the phone number to someone else to call you, say, hey, this is Fred on James's team. Nope, me personally. If you're hearing me now, you see my lips move, you're hearing me speak, yeah, I do that on the phone. I do. You can ask in the chat. People who left their phone number, I have called. Okay? If you do want to talk to me, send me a number, I'll give you a buzz. And I can guarantee you, I will not try to sell you anything. I'm not here to sell anything. I'm here to document my journey for my children, my grandchildren. And you guys just get the benefit of the knowledge that I'm giving away. All right? So, let's move on. Don't know which file to send this one right here. Chris, you and I are chatting right here, right now. Reply to Chris. All right, ready? Listen to what I'm saying, Chris. Right here, right now, not in the chat, but on the DM. Top left corner, okay? Click on that. DM me a number. I have no idea what that says. All right, I'm not 100% happy with the, what do you call that stupid thing, the AI? Didn't say anything what I said. Close to it, though. Got it? Okay. Top left, my picture right there. Click on that. They'll take you to the link to send me what do you call it? A direct message right to me. And I personally will give you a call. I say that to everyone. I think I called 4 people today. Talk to one. I got a couple of answering machines. I find it funny. You give me your number, but then you don't answer your phone. That's weird. All right. Daily dose. How do I do multiple contract covered calls if I only have 100 shares? Okay, daily dose. If you only have 100 shares, you can only do one contract for 100 shares. Okay, when you sell that one, buy something less money, get 2 contracts, 3 contracts, 5 contracts. It's a journey. Okay, it's kind of like having a pet. You got to feed it and water it every day. It's kind of like having a garden. You got to feed it, water it, and weed it every day. It's like having children. You got to feed them, clothe them, water them, send them off to school, all that kind of nice, neat, fun stuff. So why don't you pay attention to your money? Think about it. Your money will be there when you retire. Your children won't. Neither will your pets. Oh, crap, I hate to have to call early tonight. It kind of hurts. Anyway, let's keep going. So Michael wants to know... Oh, Brad Michael. Brad Michael wants to know what happens when the stock drops. How do you handle that? I came up with an interesting metaphor for you. Okay? Let's see if you can grasp it. I'm going to try to make it simple. All right, Brad. Hypothetically speaking, let's say you, the wife, decided to buy the house next door and rent it out. Let's say you paid $500,000 for it, or $200,000, whatever. Well, let's say $500,000 you paid for the house next door. You're renting it out, and you're getting what, $3,000 a month? Great, wonderful. What happens in the market if the pricing of the houses drop? Let's say it dropped down to $300,000. So now the house you just paid for, $500,000, is only worth $300,000. Are you still getting your rent? Think about it. Are you still getting your rent? Let's say hypothetically the house increased in value. Now it's worth $1 million. Are you still getting your rent? It's the same thing. You're buying a cash producing asset. Every single company that I own is a cash producing asset for me. If I have a couple of hundred shares of Ford, well, I'm going to sell a covered call against Ford every single week. So, Brad, specifically to you, specifically on that question. Harley Davidson. All right. Brad, you ready? Harley Davidson, 10/21. That's October 21st. 10/21/24. That was last year. I bought 2,200 shares of Harley Davidson. I paid $35.62 a share. All righty. Well, okay, I bought it in October, 35. It dropped all the way down to 20. Now it's at 26. I still own it. Did I panic and sell? No, I did not. But what did I do? I sold a covered call every single week against Harley Davidson. Where is it? Account statement. HOG. I'm going to go all the way back to October. Whoops. Oh, what does that say? 40.56. Okay. So do you see that right there? Trade history. 40 times I got money on Harley Davidson. 40 times. And no, red is not bad. Red is when you sell something and you make a profit. See? Credit, 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 credit. When you get to a green one, which should be all the way down at the bottom, right there, okay? Green is where I bought the Harley Davidson. See that? 10/21/24. I bought it at $35.69. Right? Sorry, $35.79. The first covered call I did, the $35 call strike. I got 184, which is over 4% for the first week. Second week, third week, fourth week, 40 times. 40. That's 40 weeks. Every single week I got some, over here, I got some credit. Credit, 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 credit. Every single week. That's what you do when you own a cash producing asset, regardless of what the current price is. But you got to keep your eye on it. Because if I take my eye off of it and leave it alone for a couple of weeks, yeah, the market maker will have a heyday. Okay? So that's how I deal with stocks who go down in value. I don't sell them. I lower my strike price so that I still have consistency of cash flow. Okay? And Harley Davidson, well, they've been around for 100 years. And they keep increasing their dividend. So why the hell not? Okay? And it's giving me a nice fat amount of money every single week. That's a false equation. You maybe sold a covered call, but you sold it at a lower amount. I'm not quite sure what you mean by that. Because far as I can tell, okay, as far as I can tell, okay, that right there says 520. As far as I know, 520 is today. And you see the credit right over here? The credit says 41. Well, what did I buy it for? Well, I bought it at $35. So 41 is more than 1% of 35. So I like it when people challenge me. It's good, you know. But I'm not quite sure how you say it's a false equation. Okay, Harley Davidson. Okay, the credit, 41 cents. And it's a weekly option. Okay, for the 30th. So it's pushed out a couple weeks. Anyway, let's get back to where we were. Here. All right. So anyway, at this moment in time, look where Harley Davidson is. Okay, here's the bottom, here's the top. $25.94. So I have it at 35. So if I sell the 26s for this week, I'm going to pick up 40 cents a share. Now 40 cents a share is more than 35. Well, 35 is what I paid for it. How do you determine the strike price if you bought it high? It's always a money equation. Okay? If I bought it at 35, I don't want to. So if we go to next week and do the 27s, we're going from 30 to 37. So it's always going to be a numbers game. And do I get my 1% every single week? No, I don't. I said I average over 1%. I did, for the most part. VC, Silas, VC, really? V-I-C-I? Why are we looking at V-I-C-I? No. I don't even know how I fell for that one. Okay, is the dividend per share per week? No. The dividend is whatever the company deems it should be. Okay, a dividend is either paid annually, biannually, quarterly, or monthly. Okay, so you get either 1 a year, 2 a year, 4 a year, or 12 a year, depending on each company. Each company is different. Okay, so Brad, hope that answered your question. Selling only. Brad Michael, selling only ensures a loss. Outstanding. Okay, El Pablo, put it, yeah, thank you for that. Mike, KR, Japena, how so you can make or lose money within a few hours? Well, yes and no. You got some beginner advice, first time seeing you on my For You page. Okay, my advice would be education. Education's always the great, always the best. Okay, good companies, never, no. Now, there are a lot of people out there just like me, showing their strategy. This is just my strategy. New Jersey wants to take a look at Mara. Can you explain how options work? Katie, how are you doing, Katie? An option is basically your right to do something or not do something. A call option is your right to purchase, but not the obligation to purchase at a certain price by a certain date. Okay, a put option is totally different. Put options have obligations, which you can be forced to do something. How many strategies are there approximately? Ooh, too many. Russian, Alex, Kagdala. Okay, please explain how you roll a position on a covered call as not much end up in assignment. Thank you so much. You're welcome. Hey, Mr. Energy, how you doing? Love the shirt. I can take a few screenshots. That'd make you laugh. All right, Brandon, thank you. Okay, there's a whole bunch of different strategies. Okay, so let's keep on going here. Okay, you selling above your original cost average, or are you creating a new cost average on the way down? Okay, Brad, I take a look at the numbers and see which one makes sense. Now, with my Harley Davidson, I bought it at 35. I told you that. This week I sold the 23s. Well, it went up. I rolled it forward to next week's 24s. Well, I rolled it up again to the 30th at the 26th or something like that. But I'm always looking for consistency of profitability and preservation of my capital. Now, I have 2 losses this year and only 2 losses so far. So I think I'm doing pretty damn good. Thank you for the explanation. Pretty much what I do as well. Okay. I just try to load up more on shares. Well, so do I. I'm just showing you one contract because other people here aren't on the level to look at 100 contracts, 50 contracts, 75 contracts. I think the most I ever did was like 178 contracts on one company. So it's different for everyone. So if I show you one contract, you should be able to decide, oh, well, I have X amount of dollars, I can do 3. Or I have X amount of dollars, I can do 30. Whatever your financial situation is, you're all individually different. I can't share my strategy with you, expecting you to understand everything. You know what you have, And you know what you like, you know what you dislike. Oh, Coach sent me a rose. Thanks, Coach. JMD. We say, well, you say you bought Harley at 35, sold at 24. You lost. No, I didn't. Or am I misunderstanding? You're misunderstanding. Okay? When you sell an option, you are selling somebody the right, not the obligation, to buy at a certain price at a certain date. So this week I sold, bring it up again. All right. I got Harley Davidson at 35, right? This week I sold at 23, so it was down here. All right? Now, as the stock moves up and down, so doesn't the option price. I do have the opportunity to buy back a position, roll it forward, and push it into another week if I so desire to. That's why they're called option. It gives you a bunch of different choices. So even though I bought the stock at 35, I sold the option at 23, 24, and then I rolled it forward, giving myself more time and increasing the dollar value of the buyback. So whoever's going to assign it or whoever's going to buy it from me, well, they got to pay more money. So it doesn't make financial sense for them to take the stocks away from me at 24. Because at 24, they also have to pay a higher premium. It's all a numbers game. Okay, so I try not to lose. So I haven't lost anything on Harley Davidson. I just keep pushing it forward. 1 week, 1 week, 1 week. So I'm not susceptible of losing. Okay? Very important to understand the numbers. One contract is always equals 100 shares. Absolutely, Brad. Move date out same strike price to keep premiums high. Exactly. Or take a lower premium and roll to a higher strike price. Yeah, or lower the strike price to get a higher premium and get a higher break even for the person at the other end. How much did you net per week from option sales? Why does somebody always ask stupid questions like that? What do I net per week? All right. Who asked that question? Eagle 18. December 30th to January 3rd. Week 1, first quarter. Okay? Account number 1 started out with 152. The profit was 9,341 or 6.19%. Account number 2, 143,000. Profit 2634 or 1.82%. Account number 3 started out with 114,000. Profit was 4,800 for a percentage of 4.23. That's just week number 1. Now I have 7 accounts. I share 3 of them publicly. 1, 2, 3. That's week 1. There's week 2, week 3, week 4, week 5, so on and so forth. Keep on going all the way up to the top, and you will end up with week 19, which was last week. Week 20, which is this week. There's nothing there yet because I post all my trades at the end of the week. Okay? And here's the totals. Account number 1. See, the same amount starting, but look at the balances. Account 1's up 49% already. This one's up 41. This one's up 62. Okay? The numbers are all there. All the trades are there. You just don't get to see them as I do them. The only people who get to see them as I do them are those that actually pay in the morning trading group. Okay? Anyway, let's keep on going. Get that out of there. Next on the list, on the Harley play. How much did I earn per week on the Harley play? What did I get for the Harley this week? Harley. This week. Okay. 2,200 shares at 40. this week. Okay. 2,200 shares at 41 cents per share. Opening a company call? No. Do I day trade over and over again or random stocks? Mark, how you doing today? I've been doing well on SoFi and NU. Okay. I don't like SoFi, but NU I like. There's a reason why I don't like SoFi. All right, anyway, let's keep on going. Next on the list. Is NVIDIA a real good buy right now? Hell no. Now, Zane, it's not a good buy for me. It might be a good buy for you, all right? And I don't tell people what to do. Okay, I don't do NVIDIA because the numbers just don't work. Okay, what is it, $120 per share? Take a look at the revenue per share. It's like below $7 per share. Look at the book value. It's below $5 per share. Why would you buy a company that's worth $5 per share for $123? Look at the dividend in NVIDIA. What is it? 1 cent? 2 cents? Yeah, no thank you. Where to trade? Now, I trade on 2 platforms, Robinhood and Thinkorswim, which is owned by Charles Schwab. Sold a put on NVIDIA. Okay. Do you think Tesla is a good buy right now? All right, so I don't do Tesla either. Okay? I only do companies that have 20 years of consistent profitability or they're on Warren Buffett's list. And as far as I know, Tesla's not on Warren Buffett's list. That's just me. All right. Next on the list, what do we have? HCTI. What the hell is HCTI? HCTI. Hell no. Hey, we were just talking about Apple. Here it is, AAPL. Now, Apple is not on my list, but it is on Warren Buffett's list. That's why I look at it. Okay? Simply put, high, low, was, is. Look at the motion. Up, down, up. 206.86. So the 207s. Well, the 207s are going for 204. Not good this week, but look at the 207s for next week. 340. Well, that's over 1%. So let's take a look. Okay, a year ago, Apple's at 190. The high of the year, toward the end of December, 260. The bottom, 169, that was in the second week of April. But look what happened there. The second week in April, she went up, down, up, down, up, down. I'm going to say no because she's coming down from the high. The high's right there. Now she's coming down. No, thank you. Oh, wait, so I'll give it about a week, maybe 2, for it to come back down around here. Before, when all the profit taking is done, and then she finds a new bottom. See the new bottom here, bottom here. See, it goes up, it comes down, the bottom consolidates, it starts going back up again. Up, down, that's all they do. So no to Apple this week. W, isn't W Wayfair? I think it is. It W? Wayfair. Yeah, no. See, Wayfair has not been around long enough. They don't have 20 years of dividend. But Kroger does. Who came up with Kroger? Mike. Mike in Love came up with Kroger. Now, Kroger originally wasn't on my list, but it was on Warren Buffett's list. That's why it's on my list now. What do I think of BYD? Lewis, never heard of it. Is that your target 1%? I like to buy on Fridays, typically down days. Okay, but you cannot, well, you can if you want, because I buy on Mondays and then I sell the option on Mondays. I can't do it on Fridays unless I buy back the one I already sold because it expires on Friday after hours. So Kroger, here we are. High, low, was, is. Look at the motion. Down, up, down, up. Simple. Don't make it more complicated than it needs to be. All right, you got it, Mark? So, 69.50. 69. So the closest one's going to be the 70. And the 70 is going for 76. Well, that's over 1%. That's what I'm looking for. Jonathan wants to take a look at waste management. And 14 million of inventory. Wants to take a look at Ford. Trying to find out where that top is. Just a comment. You seem awesome. Thank you, Melanie. First timer. Okay. Well, I'm here every single night, 9 p.m. until 11:30. Not Friday nights and not Saturday nights. The market's closed on Saturday. The market's closed on Sunday. So no sense being here. All right. A year ago, Kroger's at 54. The bottom of the year, end of June, 49.23. The top was a couple of weeks ago at 73.63. Well, look at the last 90 days. Okay? High low is look at the motion. Down, up, down, up, down, up, down, up, down, up. Well, it's definitely coming up now. That's the 90 days. That's the last 3 months. Well, the last 3 months show you it's going up. All right, see? Up, down, up, down, up. It's pretty simple. 30 days. Okay, it's your 30-day high, your 30-day bottom. Well, now she's going up. How high is it going to go? Well, that we don't know. So let's take a gander at it. All right, so I look at the 70s. So I'll get rid of this. Let's go here. Covered stock. The 70s right there. Okay, one contract at the market. And confirm and send. And here's Johnny. Buy one covered call of Kroger 100s. That's the weeklies. 30 May. Well, that's not this week because there's only 3 days left this week, which means there's not enough money this week. So we're going to do next week because now we have 10 days before expiration, not 3. 30 May 25, that's next Friday, the $70 call option against the Kroger stock at the market to open to open. Remember, 2 orders. Buying stock, selling the option. Okay, stocks are bought and sold in New York predominantly, and options are bought and sold in Chicago predominantly. Okay, so think of it that way. So the stock price is never going to change my entry price unless I dollar cost average down. Different topic, but let's stay on task for a second. Bitcoin is eating everything. No, it ain't. I got a couple cookies on my counter. Bitcoin ain't here eating that. I got Tesla at 140. Alrighty then. Oops. No on waste management. Oh, sorry, Jonathan. I was going to tell you no once we got to it. But you came forward. Yeah. Okay, 14 million wants to take a look. Okay, wait a second. Let's check out the numbers for Kroger and see if it makes sense. Because that's always question number 1. Question number 1 is, does it make sense? Question number 2 is, do I like this stock? Question number 3 is, do I like this stock at this price? And question number 4 would be, am I willing to hold on to this till the day I die? Sell a covered call every single week. Get 1 to 2% every single week and never sell at a loss. Well, that's a big question now, isn't it? Anyway, Kroger. 139. 139, which is the maximum profit right here. See, 139.50. Divided by the cost of the trade, including commissions and fees. 6,861. Okay, divided by 6,861. And it comes to a grand total of 2%. Now, I don't mind 2% at all. If I get 2% every single week, I'd be a happy camper. My goal is 1%. I lost money on Tesla. I can't help you out with that one. I don't do Tesla. There's a reason why I don't do Tesla. Okay? All right, put you down there. You get rid of that. You get rid of that. You get back to there and there. All right, back to the beginning. So Kroger was 2%. Nice. Take a look at Wolf. I don't know why. Wolf is a no. WOLF. Yeah. $3 is this Wolf.